Thank you for joining me. I want to go over what is a dividend. And the basics are that a dividend is the company paying the shareholders depending on the number of shares they hold. So if you buy 10 shares of Ford and they pay off 15 cents per share every quarter, then you get $1.50. It doesn't matter when you buy or when you sell. It just means on whichever date they decide to pay the dividend, if you hold shares in the company, you will get a dividend. So in the most fundamental sense, you are an owner of the business. And if we reduce it to an edge case, if you were the only owner of the business, you would obviously get all of the profits. So a dividend is kind of a way to replicate that. So you have a lot of owners of shares of the business, which means everyone owns a part of the business. And every one of those owners of the business deserves a share of the profit. Now, there are companies that don't pay a dividend because they think the money is better spent reinvested into the company. And again, if you reduce that to one owner, sometimes if you start a business, you don't want to pay yourself all of the profits. You would like to reinvest some of the profits into, different things that will help you grow the business. That can be things as small as business cards and things like that. So most of the growth companies would prefer to reinvest all of the money into the business and decide to just grow it that way instead of paying dividends. But in other businesses, the dividend is just paid to the shareholders as a form to split the profits. Now, you need to hit the like button, and then we go over regular dividend, which is the company deciding to regularly give part of the profit to the shareholders. Again, in the case of Ford, they pay 15 cents per share every quarter. So if you buy Ford shares, you can rely on getting 15 cents every quarter per share that you own. In most cases, that will not change for the worse. It will only change for the better unless the company is in serious trouble. So in Ford's case, unless the profit declines so much that they really can't afford to pay that dividend anymore, you will keep getting that dividend, and you can pretty much rely on that. So as a dividend investing strategy, if you just buy the stock and keep it locked away and never look at the price, you will just keep getting that money. You will just, hopefully keep reinvesting that money, and everything is fine. Now, there's a different type, which is a special dividend, which can exist both for companies that regularly pay a dividend and for companies that don't regularly pay a dividend. A special dividend is when the shareholders decide that now is the time to pay out a certain amount to every shareholder for whatever reason. So Wind Resorts did that recently, where they paid every shareholder $8 a share. That is a special dividend, and you cannot rely on that happening the next quarter or the next year or ever again. So it's just that at a shareholders meeting, they make a decision to pay the shareholders, and they don't make a decision to either raise or institute a regular dividend. They just they have it as a one-time thing, and you cannot rely on it. And if it happens next year, it does, and if it doesn't, it doesn't. And there's nothing that you can do or not do with that information, really. If they do decide to pay a special dividend and you do happen to hold the stock at that time, then you get a special dividend, and it doesn't really affect the share, except for the company is obviously worth less after paying a dividend than it was before, but you will have been compensated for that. Which means if the share price is $100 and they decide to pay $10 per share to every shareholder, then the share is now worth $90 on the day that they pay the share, the dividend. Now, what the stock does after they pay the dividend is up for debate, or really not forecastable, but the stock exchange will actually keep track of it and adjust the share price down by the dividend. So, cannot rely on special dividends, so there's really no investment advice I can give you. If it happens, it happens. If it doesn't, it doesn't. Regular dividend is a good way to have kind of a cash flow going all the time when you invest in stocks. So it's certainly something to keep track of, and something to have influence your decision in whether or not to buy a stock. Warren Buffett said before that he wouldn't invest in a stock that doesn't pay a dividend. I'm not sure if he changed his mind since he said that, but it's certainly something that's nice to have on top of the growth that the stock will go through anyway, to just kind of have that cash flow that kind of keeps you afloat, gets you a return before you sell the stock, which might not happen for a few years, or even a decade or so. So make sure to subscribe if you like more videos like this. I'm coming out with new videos every single day before market open. I hope you have a successful day.